guys, it's Doc's Market Minute for Monday, August 10th. I'm looking at a gap chart of the S&P 500 futures. Now, what I've done with this gap chart is that I'm only tracking the candles from the cash market. So at 9:30 in the morning Eastern until 4 p.m. Eastern. So the other times that the actual futures will trade creates these gaps that are in here, similar to what you see on ETFs as well too. So what is important about these gaps is that we have not had a gap, an unfilled gap, showing up in the S&P since last February. I mean, it's literally been half of a year since we've actually had a gap in the S&P. So now this morning we had a nice big gap up, and it's been so far a gap and run with about 3 hours left to go in today's trading. So there's a good chance that we're not going to see that fade back down. But we've had these before though. About a month ago, we had a strong gap up, similar situation like this, and it ran for a few days, and it gapped a couple of times during here, and then it gave it all back again. Because one of the things that we've noticed about this market in this choppy sideways consolidation that we've had since really the beginning of the year is that gaps are filled. No unfilled gap will remain. So the point of me bringing this up is that if this does not get filled, then that also tells us something. If the price continues to run away to the upside and does not fill this gap, that tells us that the market character is changing. Perhaps we're going into a trending market again. On the other hand, if the market does fill this gap, then we know that we really haven't changed anything at all. It's staying in the same character. So little clues like this can let us know if we start to see the market character changing, and then we can take a different approach towards trading the market. Okay, now here's a different view of the S&P futures, and this is showing the entire, well, 24 hours. It doesn't trade for 24 hours, but close enough. It's showing the entire day's price action, and it shows this triangle that we've seen vectoring in and is trying to break out above that today. So where this closes is going to be important. So most of the time, I don't spend any time looking at the actual close of a candlestick. I'm more interested in looking at the actual wicks or shadows of what's going on and trying to connect the dots in terms of identifying patterns and trend lines and things like that. But if we see a close outside the trend line of this triangle pattern, that's going to be significant, because so far we've had probes above and below this trend line and they haven't lasted. They've been reversed by the end of the day. And so that's important, as would be important if we close above this. So you can see it trying to sneak above that trend line right now. Again, there's 3 hours to go, so it's too early to call this one. But so far, it looks pretty good. We know that we're going to see some type of a big movement coming from here any day now. We've got a heck of a lot of energy coiled up in the charts, and we're expecting to see this range contraction, 6 months of range contraction, turn into some pretty massive range expansion just about any day now. That's it for Doc's Market Minute. Thanks for listening, folks. We'll see you tomorrow.